Finally, the Philippine market ended the week on the green after a 4-week losing streak. But could this rejection of the 7,000 resistance mean further downside this week? Meanwhile, everybody was asking me, will the dollar continue to go up? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. So the PSEI started the week strong before weak peso concerns caused the index to pull back to 6,780, but not before hitting the 7,000 resistance last Wednesday. Now, we did estimate that the index could pull back after hitting 6,843, but a mark on close spike last Wednesday extended the rally to the 0.38 Fibonacci level at almost 7,000. So the Philippine peso weakened to 59 last Thursday before settling down to 58.96 on Friday. Now, everybody was asking me, will the dollar continue to go up? Should I buy dollars now? If you really wanted to buy dollars, it should have been bought here, right? But let's look at the situation here. We've hit a 2-year high for the dollar. It is at a major resistance level here at 59. The last time we were here was in October of 2022. What happened before, despite the strong rally, it failed. It went down. The last time we hit the same level here was back in June of this year, and the dollar again pulled back. So logic tells us that every time we hit these levels, the dollar pulls back. Now, what could we expect this time around? What catalyst could the markets have that would push the dollar beyond 59 pesos all the way to 60, right? Let's look at the US 10-year yields. The US 10-year yields has hit a key resistance area here, and it's currently consolidating. So I don't know if it is going to go down or if it is just consolidating in time before it rallies again. Now, the problem here is that the DXY has broken through the major resistance area here. And if we look at the 5-year charts, look, this is a major resistance area, and it has clearly broken through that zone. So what we are looking for here is the potential for the DXY to retest this support and bounce off of that, but it's not doing that. Instead, it's forming a flag formation, which tells me that the DXY is really bullish at this time, and it's going to continue to go up. So fundamentally and technically, if you go back to the USD PHP chart, it's telling us that it's going to continue to go up. Plus, if we look at last time we hit these areas, we've had some type of consolidation. Even way back in 2022, see, we've had some type of consolidation, but we are not seeing that yet. And if we look at the Fed rate decisions, just like that, the possibility of a Fed rate pause this December has gone up to 47.3%. That's up from 44% just yesterday and 38% from last week. To make things worse, balance of payments swung to the negative side, 724 million deficit in October, and this was coming from a 3.5 billion surplus recorded in the preceding month. So, what will the BSP do in their December meeting? Here are the scenarios, right? If the BSP cut rates in December, that could further weaken the peso. If the BSP maintains rates, that could help defend the peso. To cut or not to cut, right? It all depends on two factors, inflation and GDP growth. Now, currently, inflationary pressures could prompt a rate pause in December, because inflation is still at 3.3% and the target is 2 to 3%, so we're over that. So good news for the peso. But GDP crawled to 5.2% in the third quarter, so a rate cut could help stimulate growth and help us hit our GDP target. Hopefully, there are other instruments that the BSP can use to defend the peso. And if we go back to the charts, both from the technical and macroeconomic factors, it does point to the peso hitting 60 pesos. But we'll see, right? In the meantime, let's look at some scenarios for the PSEI. We pulled back to 6,780. but there's reason to believe that it will retest support here at 6,700. So what could happen is that we retest this, and if it breaks the 6,700 support, we pray that it settles down here at 6,560 and forms a double bottom. But if it breaks that level, then 6,400 would be our next level of support. But hopefully, it can hit this level and form a double bottom and try again at 7,000, right? Best case scenario, we defend the 6,700 zone, form a higher low, and retest 7,000. Hopefully, year end, we can hit 7,200. But look at the confluence of resistance here. Resistance line, 38 fib. We have the 20-day EMA. We have the 100-day EMA. So we'll see what happens. The possibility of a rate pause and an earlier study from Lichu Property Consultants pegging a Metro Manila condo oversupply at 29 months worth has pushed property stocks to critical lows, right? We've had some form of technical bounce, but we continue to see weakness in the property sector in terms of price action. But does the price action align with the fundamentals? And with the earnings season almost over, the 6 largest property companies reported 9-month year-on-year earnings growth ranging from 8.5% to 15% with a weighted average growth of 13.3%. I mean, you know how much the PSE's growth is as a whole, right? It's only 9.8%. So the property sector has clearly outpaced the PSEI. Rate pause in December or not, eventually rates are going to go down. So there's reason to believe that earnings growth for the property sector will accelerate moving forward. And if we look at the current inventory situation, Ayala Land has shortened their inventory from 22 months to 18 months. It's not 29 months, guys. Mega World inventory has dropped to less than a year. That's less than 12. Again, it's not 29. SM Prime Holdings has decreased the inventory value by 15%. Looking at the office segment, a lot has been said about office vacancies, but FLI and MEG still managing 3% and 2% growth respectively. Ali RLC 7% growth on the office segment and SMPH with an 11% growth. So, at these levels, the clear pick here, SMPH trading at 18.86 PE ratio. The last time we were at those levels, back in 2009. Even Ali, 15.9 price to earnings ratio. That's even cheaper than 2008 levels at 1780. So, I mean, there's some disconnect between the price action for the property stocks and their fundamentals. And these are the type of market disconnects that Warren Buffett is always on the lookout for. And remember that really markets can disconnect from reality, and sometimes there's a chance for us to take advantage of that. A couple of questions I also got from a lot of friends last week was about JGS and Bloom. Now, if we look at the charts, then is it time to buy JGS? It has gone down so much. Then is it time to buy Bloom? It has gone down so much. Let's look first at JGS, right? It is currently at 2190. It has been going down for how many years? Let's look at 1-year charts. Let's look at 5-year charts. It has been going down since 2016. Most likely, it will continue to go down, right? We will get some technical bounces, but eventually it will be met with sell demand. The next level of support is at 1790 and it goes way back to 2011. Then there's a good reason for the downward trend for JGS. If we look at the fundamentals here, URC is having great difficulty, right? Down trading was prevalent in Q3, right? Down trading means that you're substituting an expensive product with a cheaper one. In this case, probably consumers are eating less VCAT and substituted VCAT for what? Clover chips, right? While inflation is going down, they are facing challenges as their low-cost inventories are about to be depleted. So they will be forced to buy high coffee prices, and this will impact their Q1 and Q2 revenues next year. Cebu Pacific has fleet and capacity growth planned for this year and next year. But the question really here is, will passenger growth catch up to their capacity growth? If not, again, they're gonna waste money. RLC, while fundamentals are good, confidence is low because there was a one-time sales cancellation. So, petrochem business continues to lose money, and an estimated cash infusion of around 8 to 10 billion pesos is needed, really. So, is it time to buy JGS? Not yet. Don't buy into the stock just because it has gone down by a lot, the same way that we should not be investing in a business just because it has already lost a lot of money, right? So how about Bloom? Let's look at the charts for Bloom. It has gone down 53% from our target price. It is now at a critical level. In the long-term charts, it is in a range. So the next levels to watch out for, 550 and 530. And if it breaks through that level, then we can look at the next psychological support level at 5 pesos. Have we seen signs of a bottoming out? Not yet, right? What are we looking for? Let's look at the daily charts. What are we looking for? We're looking for the likes of double bottoms, inverse head and shoulders formations. We're looking for consolidations. We are not seeing that yet. Look at the red candles in the past few days. There's just too much selling pressure. 2 candles, consolidation looks good, but again, we need more than that. And eventually, if it bounces back, we need to see Bloom clear these resistances in order to confirm a trend reversal. Even the moving averages need to reverse. So let's look at the fundamentals for Bloomberry, right? In terms of their Solar North opening, we are still expecting margin volatility until the end of next year. Remember, that's the end of next year, not the end of this year. So that's still a long time coming. Though there could be some positive impact from their debt restructuring in the fourth quarter, right? In their VIP segment, which is a problematic area. There's no signs of a revival there. But the current levels may actually be the new normal for now. So this could be the bottom for this segment. But despite the bad earnings for Bloom, among the other casino players, Bloom has gained market share, right? So eventually, it looks like Bloom can overcome the initial drawdown from the Solar North investment. So is it time to buy? Again, look for reversal patterns here. They could probably break even by Q2 of next year. So, I mean, wait for that. Be patient. Look for fundamental catalyst and the technical signs before investing in Bloom. So again, I mean, we don't invest in a business just because it has lost a lot of money. We invest in a business because it has the potential to make a lot of money. And one such company is Manila Water. Remember that Manila Water is on its first year of a 3-year tariff adjustment, and because of that, MWC has already hit 89% of their full year targets, right? It's on an uptrend. It's consolidating. 4% dividend payout. I mean, this is a stock really to watch out for, a projected 200% growth in the next 3 years. So on to the global markets, the S&P 500 slowly grinding back to the 6,000 level. And if we look at the 4-hour charts, you can see how bullish the S&P 500 is. Every time it hit the 200 EMA, it has formed a double bottom. It has formed a double bottom again, even a triple bottom in the past few days. So we are expecting the S&P 500 to hit 6,000 soon. Now remember that the 6,000 level has an immense put wall here. So we'll see how the S&P 500 reacts at those levels. And if it breaks through those levels, we can probably expect a year-end target of around 6,167. Because if we look at the Fibonacci extension, see how the 6,167 aligns with the 0.38 extension. Now, if we look at the historical trends, we've seen the initial pullback around this time before the November rally resumes. And if we look at the daily performance historical charts, 2nd to July, November's win rate is at 70%. And look at the positive days towards the tail end of the month. So things are looking good for the S&P 500, which leads me to another frequently asked question to me last week. When should I close my Etoro account? If you have Etoro, you will no longer have access to it by next year. So with a bullish November and the potential for the dollar to further go up, maybe you can close your positions by the first week of December. Remember, you need to close your positions by December 5 and you need to withdraw your funds before January 19. Right? So, that's it for this week. Please like this video. If you found the information useful, please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.